Yo, what's up, y'all? This is Steven, aka the .wiz.one or the Wiz Wise One, whatever you want to call it. This is a little fun name that I came up with. So, we've got about 69 videos on the channel, 75 subscribers. We're not crushing it, but we're not working too hard. You can find me on X as well, usually trolling Top Step, and yeah, it's kind of toxic there, and I'm a little toxic on that platform as well. I think it's just par for the course. But today we're going to be doing a little bit of back testing with Deepcharts and just some technical analysis. We might look at a few different markets, but we're going to be focusing on NQ, preparing for next week. Lots going on in the world, and had a pretty decent week with my funded sim accounts. Not so good with my uh, evaluations because I essentially, well, I can just say I kind of gambled a little bit with them. But I was happy to continue to have discipline with my funded account. So there's still work to be done, work in progress, and yeah, it's a little bit difficult to be on point all the time, something that I'm working on. So right now we're looking at the NASDAQ futures. $20 per point, NASDAQ 100. And in order to hold one contract overnight, you need to have about $37,000 in your account. Hence why we trade prop firms, because you do not need that. So that being said, let's go ahead and open it up and just take a look at some stats and see what's going on with NASDAQ. Settlement price for NASDAQ, estimated volume, 569,000 contracts. Prior day open interest, 24,000 or 241,866. Today was a holiday, Black Friday, so the markets closed at 9:15 a.m. Eastern time. I thought it was 11. I had some contradictory information in some emails, so not a lot of trading today. I did have some trading in the overnight in a sim account, but other than that, we're going to focus just on what we'll be looking for come Sunday night, Monday morning. Previous day open interest, again, 241,184. Let's look at Wednesday. Prior day interest 244,668. So open interest is declining slightly over the week. Let's come back to Monday. So from 258 to 256 to 244 to 241. So open interest is declining. At least it did over the course of the week, just slightly every day. So that's one thing I like to look at. Let's look at some volume over the month, basically from the 20th of February to April 2nd. Volume has been steady and seems like pretty much fairly consistent since the war has started. Let's go back. I guess that's fine. We got April, right? March, April. Let's go back to March 27th, February 20th. I guess that doesn't really matter that much. And so yeah, that's what we have. Settlement price, 24,218. So that's our settlement price as of Thursday, which was yesterday. So we'll open up Deepcharts. We'll get started. So I love the Deepcharts platform. Been using it since Black Friday. And we'll start from scratch because I always like to start with a fresh chart. Open up a new price chart. Actually, let's look at a profile chart first. We're going to pull up NQ. And we're going to do a 90-day. So we'll go custom 90-day, and it's going to be by tick data. So it's going to give us 3 months of profile. Now this is a TPO profile chart, so it's time, price, opportunity. So it's more based on how much time price spent at particular levels. So this is our 90-day 90-day print. Now I don't believe I can make any diagonal lines, which kind of sucks, but what we can see, generally speaking, over the last 3 months, we'll just annotate the highs and the lows, right there. And let's see. So over the last 90 days or so, we've had a 13.72% price swing. Total number of points, 3,647. 14,620 ticks. So we're clearly in a downtrend. Okay, so you can see that we made lower highs, lower lows, lower highs, lower lows, and lower highs and lower lows. So we had a little bit of retracement. Looks like we came back to test this previous area, if you want to call it resistance. Like right around here. We ended up closing a little bit below that. So this value area low, there's not much value area low there, just this little sliver of blue. So this day, we could also take a look, right? What day was this? This was March 8th. What was March 8th? Just curious. It's always nice to. So March 8th was a Sunday. So it was Sunday night to Monday morning. Is that right? March 8th? Is that 3 January, February, March 8th? Yeah. It's from 1600. Yeah, so that's starting a Sunday night going through Monday morning. So that is that was our Monday session. Now what's interesting about this particular candle right here is it's one of the bigger candles of any day in this whole 90-day profile. All right, so we take a look at that. It's even bigger than that candle. All right, so this was another big one. That was March 2nd. All right. So those are the two biggest candles of this entire profile, where we had the largest range of price swings. So let's pull up ChatGPT. Give me 1 second. I want to make sure I don't expose and dox my credentials. Put up a new chat. There we go. So what was significant in the futures market, specifically the indexes on March 8th, 2026. It was the largest 90-day daily candle of until the present. Let's see. Let's see what it has to say. The main driver, reaction to the Iran war and in the violent reversal once de-escalation headlines hit. March 8th, 2026 was a Sunday, so for index futures, meaningful move was the Globex reopen that evening into Monday, March 9th session. The significance was the equity index futures got hit by war-driven oil shock, then violently reversed when headlines suggested the gamble might not escalate as badly as feared. But it did. So now we're more than almost 5 weeks into the conflict. March initially was treated as stagflation risk-off shock as Iran entered. Price surged over 100 at one point, much higher intraday. All right, so stress test of a higher market regime. Okay, oil shock, index price recession, stagflation risk. Then de-escalation hopes triggered a sharp squeeze repricing. Okay, in plain terms, because it showed index futures were being driven primarily by geopolitical headline and risk through oil inflation channels, not by other things. Yeah, that makes sense. Okay, so there we have it. So that was significant. So that was our biggest day, candle wise. So interestingly enough, we are actually, let's take this look. March 30th has a pretty big candle too. Let's see if it's bigger. It is not. Okay, so what's interesting is it looks like we're retesting this March 8th low, right? So we had an aggressive rebuy back up to the previous day valuary high, and we tried to break through and we couldn't, and then rejected back down to about 50% of that March 8th candle before one more retest up into that valuary high of the March 7th or the Friday candle, I guess, prior to March 8th. And then we came back, retested the March 8th low and rebounded, came back into 50% before retesting the bottom of the March 8th candle again. Then on March 25th, we broke through and retested the March 19th low before breaking through. So this level right here is, I would say that's a significant level right there, where we sold off before coming back to retest the point of control from both this large March 22nd, fairly large green candle, not quite as big as March 8th, as well as the March 8th low once again. So you can kind of see that we're having a hard time breaking through this level right here. So this is likely the most significant level at the moment. So we look at it from a swing standpoint. We had this swing low to this swing high right here. Can't really do it. We'll do it on another chart. This chart is mainly just for profile, so I can't draw fib lines or anything like that on here, but we can definitely see these lines. So I'm going to say the bottom of the range is going to be down here. This is yet to be retested at the bottom. It's 23,000-ish. We just call it 23,000. It's 22,945. The value area high, or excuse me, value area low is at 23,075. And the very bottom, this is about 25,300 or 23,000. So we'll just call it 23,000. And we have 24,200 as another important level. So I would say those are the most important levels, and this is from a TPO, a time spent at different levels. Now we can, most of the value in these two profiles can be merged because they're all in the same area. So we found the bottom, 23,000. So this week we had a good recovery, right? After coming back to retest the low of the March 8th candle, we came all the way back down, and it looks like we tried to repair this low volume area. Which is interesting. All right, we didn't come back to test the value area high. We pretty much just came to this low volume area before retracing and making our way back up before rejecting again. And that's where the overnight session for Thursday night and Friday morning is essentially right below. So that's kind of where we're at. We could potentially trying to recover and find our way back to an area of previous value. But right here you can see we essentially for the last 3 days, this is a very short day, right, because it's just a Thursday overnight. We can definitely merge these two profiles together. So we're inside the value area, and we can see that's where we return to an area of previous value before the extension to the downside. So a couple different possibilities. We could, I mean, it is possible that we come all the way back down to the point of control or the value area high, right? Because that hasn't been, or we could retest all the way down to the low to see if we extend farther down or start to move back up. Well, just based off what I'm looking at, it's likely that the war is escalating and the conflict is escalating. We may even open up lower. We could open up Monday morning or Sunday night a lower. We had a couple planes get shot down. One person's missing in battle. They recovered a couple of the pilots. So, truth be told, it's not looking great. But some of the economic numbers and job numbers and unemployment, excuse me, look pretty good. So there are things that are conflicting, and we did have a nice recovery throughout the week, at least to this March 8th March low. What I see up to the top side potentially is have this area of value where we spent a significant amount of time. It was also a point of control back here. So I could see us returning to somewhere in this 50% level right here. So we could return to here, somewhere around here, or this 6.81. Obviously, we're on a profile chart, so you won't be able to see any of that. That's just in my head. And that might be another area that we make our way back up to before deciding where to go next. Now, if we break through this level, I could see us coming back to this previous area of value, which is another high, a daily high that we've yet to retest. So this high is right in line with the point of control and where the most volume was traded for a significant amount of time. So we could return to this area of value up here. So if I'm going to put a line on it, somewhere around there. So those are kind of my areas of interest for the NASDAQ. To the downside for the last 90 days, we really don't have much. So what if we take it out to $180 days? Let's see what we have. Okay. What about 270? What I'm really looking for is a low. Or something below 23,000. There we go. We're almost there. You can see that these lines that I drew are pretty much in play. So this line right here is in play. I think I need to go back. Let's go 365 days. So 2. Gonna take a little bit longer because I'm loading tick by tick data, which might be a little bit extreme. So, okay, now we have found some levels, and interesting enough, this level that we tapped off of before rejecting was an area where we had a hard time breaking through. We broke through it, and now we're retesting it. So this is kind of interesting to me. This is a previous area of value, right? So we did retraced all the way down, tapped into an area that was unmitigated, before rejecting off of it pretty hard and moving back up towards a previous area of value. So to even, I would say that's kind of the previous area of value right there. Now we haven't put volume profile in here yet, so we'll add some confluences and things, but to me this is kind of the previous area of value where we could see a return to. And I think it's more likely to be somewhere in there. Okay, so that's going to be an area where I'm going to possibly look for a short. And down here at the bottom would be an area where I would potentially look for a long or a breakthrough to return to this previous area of value back in November 7th. Wait, no, what is that? June 11th. It's 2026 or 5. So that was last year in June. So that's kind of what we're looking at right there. So now that we have our long-term profile frame, we're going to return this to 30 days. Just a little bit more short-term view because we have these longer-term levels marked. And we'll go ahead and minimize that. Now we're going to bring up a new price chart. And we're going to make it NQ. And this is a 5-minute chart. Let's start on the daily. These might be some errors. This is kind of weird. No, that's March 8th. That isn't weird. That's that day. That's this March 8th candle right here. That's kind of crazy. If that's accurate. That's insane. I want to look at the hour by hour. That is massive. Both of these wicks, right? What's interesting, and that's August 2nd. So interesting on this is that they're almost the same size, right? And this is man, those look ugly. That's not right. There's no way it didn't go down to 2000. So these are errors. These are data errors. Okay, looking at the price scale. This isn't accurate. I don't know what the fuck this is. Let me do 60 days by tick. Let's try something different. It says it went down to 0, right? That's a total anomaly. That's not accurate. Not accurate at all. It says the NASDAQ basically went to 0. That's pretty funny. All right, and that's what, March 8th? So does that mean all of my data is like incorrect? I don't know. Let me try something different here. A little bit of troubleshooting. We're not connected, so let's look at the DX feed delayed. We're not. And let's reload. That's just really shit, right? That's just really shit. That makes no sense whatsoever. All right, so let me open up that profile chart again. Yeah, these are all correct. It's just that daily chart that's not correct. So very strange. These all look right. And I'm going to double check with TradingView. Let's open up TradingView. Take a look at TradingView. Let's go NQ. And daily. So this is February 6th. And that's the March 9th, March 8th. So it's this candle right here. Checking the size of it. Yeah, it's the biggest candle, so that makes sense. And this is that October 10th candle. So the October 10th candle is the biggest candle. For the November 25th. February 9th. And this March, it says March 10th. Wait, no, that's March 9th, Monday. So that's taken into account Sunday as well. And just about as much on this Monday. This is our Monday, I believe, or no, Tuesday. So just almost the same size. Super interesting. So that candle and that candle are literally almost the same size. All right. Math is the math. So I'm not sure what's going on with this but that is not right. Okay. So we're just gonna disregard those data points because there must have been some type of data error. And we should see if we go down to like maybe a 4 hour. Yeah, that's an error, right? On February 6th, there's just some kind of error there. Okay, so we'll just disregard that candle. Shouldn't affect us too much. All right, so looking at the daily, let's go back to the daily. We're in a downtrend, right? Or it could be a pullback. And this really annoys me. All right, so if we take this entire, let's just start from like right here. This is daily for 1 year. Is that an entire year? Yeah, that's an entire year. So this is our swing. Pretty strong uptrend. And we're currently hovering around the a 30% retracement, or the 30% retracement level from the all-time high. So I think there's still room to the downside. Obviously, a couple things that I see. First off, I don't think the war is ending anytime soon. There's just so much misinformation. We have this, I guess you could call it a fair value gap. It looks like we tapped into 50% of that. All right, we had this gap and rejected. That's pretty interesting, right? The next one that we have, all this was pretty much mitigated, is down here. And we also have this little opening gap right here. I think it could be possible that we come all the way down to clear out this gap here. It's interesting. Maybe all the way down to the close here, like something like that. We're going to go ahead and add the lines that we have from our profile chart. And that's our previous area of value. Let's just make this gray. All right, so that's kind of a gap that needs to be filled. And that's kind of what we're looking at right there. So do we just continue to kind of move sideways between this value area right here between this value area and this value area, and from there to here? Is that where we'll be for a while? The market is showing some resilience. Quite possibly. Interesting to say the least. So that's kind of what our New York, NQ looks like. I'm going to be looking to get involved in these two areas here, the high and the low. Let's move it to a 4-hour. If I was to pick a swing, this is the swing high to the swing low. We retraced, came back to the 50, came back to the 70. We could be working our way all the way back up to this zone, or we could be starting to work our way down. This is just a big retracement. It's potential, like 100%. So interesting to say the least. And that swing right there, we retrace back to 50%. We retest the high of this swing and then double top and push down, or come above it and then push back up. So a couple different scenarios, keep an eye on it. But the general gist is I think we're it's a pullback and a downtrend. And I think as long as this war continues, and I mean, I'm not really optimistic, but I don't really know shit. So I'm kind of pretty bearish if I had to pick a side. And we have a pretty strong downtrend here. And if we really also take a look at it and make it kind of a channel, we're just slowly working our way back down. So that's what NQ looks like. On a more short-term basis, let's look at the hourly. Price action's pretty crazy. Big swings. These are big hour, big candles. So this was April 2nd. So Thursday. Huge move back up. So that was a 418 point day, or excuse me, hour. 430. 643 on March 23rd. Crazy. So it creeped its way down, and in 2 hours it pretty much retraced everything, swept the high, and then started to move back down. So it was a pullback and a downtrend, essentially. Swept all this liquidity right here. Right, and then proceeded to rip down. Then on the bottom side, we swept the liquidity right there. Or returning up, taking out some stops. So interesting to say the least. And now maybe we're starting to make our way back down. So I don't know, but we're ready. Let's change the market. Let's look at gold. No data available. Why is that? Interesting. Let's try something. Go back to NQ. Actually, let's do something else. Let's pull this onto MQ. And then we'll save this workspace. April 2026 NQ prep. I'll save our two charts. Go ahead and close them out. And let's go into symbol manage. We're looking at COMEX. And let's put it on DX feed, 15-minute delay. Let's try again. The fuck is that? What's going on? It's open. Okay. New price. COMEX gold. All right. No data available. What the fuck? All right. I'll be right back. This is kind of annoying. All right, so I need to troubleshoot this because this is not good. Because with the delayed feed, I wonder if I need to download the data first. Let's try this. Download data. Okay, I think that's what I need to do. So let's call it from, let's do it from January. January 1, tick data, and let's select the symbol COMEX gold download. I don't know why it says April 26 prep. Oh, that's because I saved it. That's why. Um, okay. Try this again. Close it out. All right, one more time. What the fuck? All right. I don't really trade gold that much, so, but I still need to be able to do this if I want to trade other symbols. So let's try this again. Download data, tick data, 1 1, select symbols, COMEX, gold, download. Let's just close everything out and try again. One more time. I think all the charts need to be closed to download the data. So we'll start from scratch, download data. I'll figure it out. It's clearly not intuitive. Maybe we'll be successful this time. That doesn't look very good. What the fuck is that? Rollover. Oh, okay. All right. So it's an older. Okay. There we go. All right. Yay. Fucking A. All right. So we have a year of data. We're only showing the last 10 days. So let's open up a profile chart for gold and kind of do the same thing. And We're looking at 30 days. Honestly, it kind of looks like it's mimicking the equities right now, which is kind of crazy. So let's change this again to, let's look at 180 days. Okay. So interesting. So we have this small area of value right here, which we tap back into and rejected hard. Then price spent some time here, but hasn't really spent much time there since, other than to reject off of it and return. We spent some time here. A little bit more important because this area got tapped into a second time right here. And then we really didn't find an area of value, just price discovery. All right, this really huge move up to 5,700 back in January, the end of January, before we just ripped to the downside, retesting this area right here, which we really didn't spend a lot of time. So this could be an area of value from a previous longer than 6 months. So because we could do a year by minute, so we don't really need tick by tick data. No, not really. So that's interesting. We tap back into this level, just 43.75 multiple times. So I would be looking for a rejection from there. Looks like we rejected here next as well before returning back up. Fuck. Kind of looks like we're in this area of value right here, right now. So I'd likely look for, if we can break through this zone, I'd look for us to come back and retest potentially, or a move back to the upside might look like we're coming back here next. So that's what gold kind of looks like. Those would be the areas of interest for the golds. I don't think I have silver data because I didn't download it, and I don't think I want to at the moment. But let's look at the price action on gold on a 30-day. Actually, this is a profile chart, so minimize that. Come back here. And to be honest, the price action here looks pretty good. All right, we had that and looks pretty damn good. We actually put that into a channel, which might make more sense. Might look something like that. So we broke through that channel, retested it, and now maybe consolidating before making another move to the downside. Or do we jump back into this channel and continue a slow grind up? So this is kind of interesting. So we have this swing, right, with this big buying imbalance. We came back in, retested it, and then left the range before returning to exactly 50%, leaving the range again, retracing back into it, just not as deep, before leaving the range again and sweeping some of this liquidity right there. So not really sure. It does look like, though, from a area of value, this zone right here kind of covers the area we're likely to return to. And on the upside, we really hadn't established an area of value. This is a 5-minute chart, by the way. Let's look at a 4-hour. So that's 3 months on the 4-hour. This is interesting right here. This is probably like 50%. So this huge swing tapped right back into 50% and created this area of value. So here to here is our spot to the upside. Maybe we return back to the downside. So who knows? I think I'm too tired to do this, so I'm gonna cut it short here. I'll come back tomorrow. I don't know what I'm gonna do, but definitely need to practice. I feel like I'm falling asleep, so make me some tea, or kick my feet up, and call it a day. Y'all be good.